we've seen our sales come down, we've seen our listing inventory go up, and we've seen our prices come down in that same time period as we've been seeing our interest rates increase and the mortgage every month becomes a heavy burden for a homeowner. Hey everybody, hope everyone is doing well. My name is Gonchar. I'm a real estate agent in the GTA. Wanted to share a quick video today. We're going to talk about house prices. Where did they come from? Where are they at? And what's my prediction for where they are going? So I'm going to share my screen with you and we'll be going over some figures with you. Let me help you understand the market, show you the numbers, and show you where we currently are at. Okay, so we're going to switch over to the screen here. Now I'm going to be sharing the prices with you from where they were at their peak price and what date that was at, and then what they look like in today's market. If I do a year-to-date analysis, it's not going to be a fair representation of where we came from, where we are, and where we're going. So I want to jump back and show you the prices of where they were at their peak to where they are now. And we are going to be going over 5 different things today. I want to share with you the interest rates, what they have done in the last year and a half, what mortgage payments look like now that we have the new rates, the buyer confidence right now in our marketplace, the difference in the sales that we're having month by month versus the active listings that we currently have in our market, really important, and then how our values impacted. So we're going to be looking at those numbers, then coming back to this chart. And then last, I'm going to give you my prediction for where I believe prices are going. So let's get right to it and talk about interest rates. So the first interest rate increase that we had was March 3rd of 2022. And you'll see that when we look at our dates and we look at when these prices were peaked, it was February of 2022 and March of 2022, right around the time that we had this increase on March 3rd. So as of March 2nd, 2022, the Bank of Canada rate was at 0.25%. We saw that increase by 0.25% and go to 0.5. We saw another increase of 0.5%, a full 100 basis points, 75 basis points, 50, 50, 25, 25, and 25. We had a total of 10 increases between March 3rd, 2022 and July 13th, 2023. And we saw the Bank of Canada rate go from 0.5 to a 5% interest rate. So this is what the interest rates have done over time when we look at it on a graph, and that's going to be important when we look at the prices and what they have done. Now, interest rates are only important when we are looking at them in comparison to our mortgage payments, our line of credit payments, and how that affects the average homeowner, the average buyer. So if we looked at the interest rates in March of 2022 at 0.5% once they went up, the variable mortgage rate went to 0.90%. So for every $100,000, it cost us $372. Then when it went up to 5%, for every $100,000 payment was $636 per month. And if we look at that on a $500,000 mortgage, that means a homeowner's payments in March of 2022 went from $1,800 to July 13th, $3,100. If that person had an $800,000 mortgage, they went from just shy of $3,000 a month to $5,100 a month. And that increase from March 2022 to July 13th, 2023 was a 71% increase. The average person's mortgage payment went up quite a substantial amount. This is the graph that is charting the $800,000 mortgage, March 3rd of 2022 at $3,300, all the way up to $5,100 as of July 13th, 2023. Now that has had a huge effect on our market. I just want to talk to you about the buyer confidence and what the active sales were per month that we had in our marketplace, and also what the active listings were sitting at. The relationship between the two is a key indicator for how strong our market is. The lower the number, the better the market for sellers. The higher the number, the better the market for buyers. So for our market to have a strong indication of strength and price appreciation, we want our months of inventory number to be low. And anything around 3 is a balanced market. Anything above 3, it means that we have, let's find a month here with a really high number. So at 4.23 months of inventory, we have 19,000 listings, but we're only selling 4,500 a month. That means it would take 4.23 months of this number of sales to sell all of the active listings that we have in our marketplace at that time. So we've seen the market go from 0.94 months of inventory, and that's a very, very strong seller's market. That means that prices are going to be increasing. Our sales to active listing ratio was fairly close, and then we see that increase over time. We saw it kind of sit around the 2.5 mark, and our prices started to come down a little bit. Then we were in a balanced market. Things picked up and our active listings remained relatively low in relationship to our sales that we were having per month. Then we saw our active listings increase, but we saw our sales drop. And that was a result of the interest rates and the effect on the mortgage payments that had that we went over in the last chart. So if we take a look, this is our sales per month and what that looks like every single month throughout the year. This starts in March of 2022 and goes to December 1st. So we've seen our sales activity drop quite a bit. We saw an increase in the beginning of this year, and then we saw the sales activity drop again. So for our market to be strong, we want to see our number of sales rising, and we want to see our number of active listings dropping. That means we're having more sales than listings. When we have more buyers than we do sellers, we're going to see a lot of people that are going to be competing for the same thing. That's going to mean that price is going to appreciate. When we have the opposite, when we have our number of sales dropping, not a lot of buyers buying stuff, but we have our active listings increasing, that's when we're going to see our prices drop. We have few people looking at a lot for sale. The sellers are going to have more competition. There's going to be less people looking at more listings. Obviously, that's going to have a negative impact on price. And that's exactly what we saw. If we look here, we're seeing our sales dropping and we're seeing our active listings increasing. Here we saw our sales dropping and our active listings increasing. So that's going to speak to the strength of the market at the time. Again, we don't want to see sales decreasing while our active listings are increased. That's going to make us have a more difficult market, which we saw here when we saw our months of inventory go from 0.94, a very strong seller's market, to just over 3, which then becomes a buyer's market. So now we want to focus on what that looks like in relationship to our prices and how that has affected them between February and March of 2022 and today. We saw the price go from 1.334 for the average house, and that's in all of GTA, down to $1,082,000. So that's a decrease in prices between February of 2022 and today of 18.88%. And when we break that down and look at it from different property types, how it's been affected in our market, we saw the semi-detached market go from 1.36 down now to $1,060,000, down 22%. These two property type classes were also similar. The detached market went from 1.8 to 1.4, a drop of just shy of 22%, and townhouses went from 1.255 down to 984,000. That's a drop of 21.58%. Now the condo apartment market didn't do as bad. We saw it drop from its peak in March of 2022 from 810,000 down to 710,000, which is only a decrease of 12.17%. Bringing the average sale price down to only 18.88%, even though we saw the semi-detached, the detached, and the townhouse market come down about 22%. We only saw the condo apartment market come down by 12.17%. So that's something that's really interesting. So now the question is, we've seen our sales come down, we've seen our listing inventory go up, and we've seen our prices come down in that same time period as we've been seeing our interest rates increase, and the mortgage every month becomes a heavy burden for a homeowner and becomes very difficult for the affordability of a buyer. So the question is, where are interest rates going to go? And number 5 on our list today is, where are prices going to go and what that looks like. So let me share with you my prediction for this year coming up in 2024. So first of all, if we see the interest rates kind of plateau, which it looks like they're going to do and which they're talking about doing, and then having decreases in the interest rates in Q3 and Q4 of this year coming up, that is sort of the curve that we're expecting in our current interest rates. So if that happens, what I think is going to happen 2024 in May, we're going to have all of these are the sales. I think we're going to see an increase in sales as our interest rates sort of plateau and people realize what's going on with pricing. I think the beginning of our spring, we're going to see prices decrease a little bit, but then we're going to see all of these active listings are people that most likely have to sell. right? And these are the buyers that have to buy. Other than that, they're either scooping up a really good deal right now or they're waiting for prices to fall even further. But once we get through these active listings and we either see them come off the market or we see them sell, we're gonna see our active number of listings decrease. And I think if we drop to about this amount here, which we've seen them really increase, our active listings have really increased since June of 2023. I think we're gonna see them return back to this level as of May 2024. So if we had 12,000 listings and then we saw our buyers start to jump on more product as they've gotten used to the interest rates and they're buying really hot deals, I think you'll see our number of sales go back up to sort of this same range as well. So if we had 8,000 sales in the month of May with 12,000 listings, that would mean that we would have 1.5 months of inventory, which would put us in a really good seller's market. If we're in a really good seller's market, we're seeing the active listing inventory drop and we're seeing our sales go up. We're gonna see an increase in prices. I don't think we're gonna see anything dramatic, but I do think that we're gonna have a stronger market in the last half of 2024. And again, it's really gonna depend what they do with rates here and what this looks like on this tail end of the chart as we enter the new year. But the prediction is, and most banks are coming out saying that they are going to keep those rates even, and then they're projecting that they are going to come down in the last half of the year. So if that happens, we're going to see sort of a rocky start to the year and then finish up strong. But I would love to see our number of sales increase as we get more into the year. And that is what I'm expecting, because we have right now a shortage of homes. There's not much available. We have tons of new immigrants coming to our country. Our unemployment rate is really low and we're seeing lots of people want to buy real estate. The only problem right now is that it's very difficult. It's very difficult for a few reasons. The first of them being that there's not much available. Even though it seems like we have this really high number of listings on our market right now, we also just don't see the sales happen right now. We know that when the sales were going crazy, we were seeing 10,000, 13,000, 15,000 sales per month. If we were able to get our listing inventory to 12,000 and we had sales like we had in 2021, 2022, we would be in such a strong market that we would see our prices really increase crazy. I don't think that we're gonna see our number of sales get back up to that point, but I do think that we're gonna see them strengthen from where they are right now, sitting around the 4,500 mark per month. And then this ratio will get a little bit better. It will decrease. We'll have more sales, less listings, and then we will see our prices kind of return to our steady, slow climb, which we are expecting in the real estate market. So that's where we're at. Those are the numbers today. Thanks for watching the video. Hopefully you find this helpful and not too confusing. If you're wondering in your neighborhood how prices have moved between the peak to now, I would be happy to have a separate conversation with you and go through these numbers more detail oriented and fixed to your house, your neighborhood, and actual comparables to your property so that you can know where your equity is at, where your home value is at. And if you're considering a sale, we can use these numbers to strategize the perfect time for you to hit the market.